Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. In our mainstream financial circles, everyone preaches the gospel of a standard emergency fund. They tell you to set aside 3 to 6 months of living expenses for a rainy day, a broken pipe, an emergency medical issue, or some unexpected dip in your business revenue. But out of all the real world high net worth leaders, the heaviest, most volatile storm doesn't happen in a broken appliance. It happens in a government. High net worth earners operate under a dangerous illusion that their tax liability is predictable, a fixed piece of their overhead. But when you aggressively scale your business, exit real estate positions, or take massive capital gains, a single quarterly shift can have a massive unpredicted spike in your taxes. Today, I map out the ability to create a tax emergency fund, the ultimate financial shield to keep your kingdom liquid and uncompromised. So before you just wing it and settle with the IRS next April, you have to prove your case with some strong data and not take a chance and play with the government's money. Many entrepreneurs treat the IRS like a cheap credit card. They think if I come up short, I'll just do an IRS payment plan. The underpayment interest sits at about 6 to 7% annually and it compounds daily. But that's not the biggest hurdle that you face when you do that. If you fail to pay on time, the IRS stacks on a failure to pay penalty that's about a 0.5% a month on top of the interest. Even if you secure an official installment agreement, that interest or that penalty could cut in half, but it's still pretty significant. When you blend your daily compounding interest with running penalties, you end up with an annual interest rate greater than 10% when you borrow from the IRS. So that's not a viable strategy. Borrowing from the IRS is a margin killer. You wouldn't accept a 10% variable rate from any commercial lender or credit card, so why would you accept it in this scenario?
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
To insulate your firm from this potential liability, you are going to create a tax buffer strategy, basically a segregated account that sits separate from your operating capital in your personal rainy day fund. There are 3 strategic ways to correctly fund this tax emergency fund. One is doing what I call the revenue siphon, where you start with a lump sum and based on your pass through net income, you increase the percentage that you contribute to the fund every quarter. So this will move with your net income. The other option is a capital preservation fund. Really, it's not a wealth building play, but it's more liquidity sitting in a high yield cash equivalent like a treasury T-bill or a money market, but it's yielding clean, low risk returns while waiting for you to deploy it. The third option is really just a boundary creep stopgap. This is a fixed amount of money that you just sit in the account and you don't use it for inventory expansion, lifestyle changes, or anything like that. It sits there and it just cushions for unexpected changes in K1 spikes. When you establish this fund, going to see your accountant every quarter will not be so stressful. You will have a certainty and a peace of mind going into those meetings. I'm Nathan Weaver. Remember, lead with confidence, live with integrity, and build something that lasts.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.